Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about SBI Cards, which looks like a good long-term bet. So let's understand what is the business and let's understand how you should buy the stock. Let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about SBI cards, here's a small request. They kindly support me on Patreon, and once you do that, it will help me grow the channel. It will help you also ask me questions on Patreon. Once you get the $10 Patreon membership, you can ask me one query a day, and also you'll get access to my watch list and portfolio, etc., and a lot of articles and videos that I publish. For detailed market or company talk, or for analysis of your number of stocks, etc., you can directly email me. Now about the company. So SBI Cards is the part of the SBI group. They provide all sorts of card services. Second largest card company after HDFC, and it has a big market share. And currently with the kind of environment that we're living in, card transactions are going to get even bigger. So Indian card consumption has been extremely low, and over the years it seems that the consumption or the usage of the card would be even greater going forward in the next decade. And in that respect, SBI cards could also fathom a lot of market share. It has been growing continuously at 20-22% over the years. The market cap of the company is around 60,000 crore or so, just above it. The valuations are expensive but reasonable. They are not overly expensive, but you need to consider that it is the only card company that is listed and doing pretty well in terms of its growth and having more members joining in. So in that respect, if HDFC cards was listed, then I would have preferred that. But since this is the second largest in the business and it is the only one listed at the moment, then I would back SBI cards with the kind of business that it is having. If you look at the financials of the company, then the sales have grown by 21%. So 2,433 crores has been the sale. The profit has declined by 70%, but that is only due to exceptional, etc. So it is not that the profit has declined sharply, and so the company is not doing that well. High promoter and institutional holding, only 6%. Free float is there. Return on equity is around 30%, and operating profit margin is around 16%. This has been an exceptional return on equity figure, because if you consider other companies in the financial sector, they are producing close to 20% ROEs, etc., but this one is having an ROE of 30%. So why is the euphoria in SBI cards? The moat and leadership. We see that SBI cards has had a tremendous performance over the years. So it is, although it is the second largest, but it is the leader in terms of the listed companies and the moat that it has. So cards usage, as I said, across the formats, whether it is in shopping malls, in shopping, in food restaurant, in online shopping, etc., would become even bigger, and the fees levied could increase. There could be other aspects through which, or other products through which SBI could really mint the money from this business, and the management itself is pretty credible to back at. So this is the moat and leadership that I'm talking about. The return ratios, as we have seen, is around 25-30%, has been consistently above 25%. uh, Longevity of the business is always there, so it doesn't look like that this business will go out of shape unless the online payment system really gets their act together. So in that respect, SBI cards is safe, and we can look at 8-10 years of investment into the stock, and currently it is selling at premium. And most of the quality stocks, you look at many stocks which are in the retail space, there are stocks in the consumption space which are still selling at premium even though the markets are down. And similar cases with SBI cards, these are premium stocks selling at premium, and they would become even expensive going forward if return ratios and the numbers keep on coming. So You need to consider all that through, and then only uh, one can look at the numbers, or whether the stock is expensive or not. If you look at the stock technicals, then at the moment it had a subdued IPO. So 750, 770 rupees was the IPO, but it fell sharply, and we had a stock price of below 500 even. 450, 500 looks a very strong support. It has run up from those levels, but any dip towards 550, 560 levels would be very good buying opportunity. Currently trading at attractive valuations. If you consider the FY22 numbers, any dips to 550, as I said, 520 levels would be very good to buy into. Above 770, 780, you could see a good up move of 30-40% to 1100, 1200 levels, and the 50-day moving average is around 570 levels, which it has crossed. And so it looks like that the numbers would, or the stock price would, can even surge once the markets stabilize. So what needs to be done? In my opinion, you can buy at these levels and on declines. Wait for levels less than 550 to really get into it. But if you're lucky, you'll get those levels. Otherwise, you can accumulate at these levels and on major declines when the market falls, such as the market fall we have had on Friday, and then the recovery happened. Those were the days. These are the days to really get into marquee brands or stocks. It is a very good long-term buy in my opinion. So this was my video on SBI cards. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.